And we are live. How's it going, everyone? Very excited to have our guests on. And today we have projects coming from all corners of decentralized finance. This event is specifically focusing on chain derivatives and synthetics building within Web3. The summit is pretty notable because we saw an explosion of DeFi in 2020 and 2021. And according to DeFi Llama, there's close to $200 billion locked across all chains and DeFi platforms. So notably, it's very fitting to have this event and really talk with builders who seem to be building this next wave of decentralized finance in the form of derivatives. So we have a bunch of different protocols on, and everyone is building a slightly different product. But the main idea here is one, to just learn about each protocol, what they're building, but then get onto more just broader discussion on where is DeFi going, the importance of derivatives, and all sorts of other stuff regarding Web3. So with that being said, bear with me as I set the stage for our guests. Our first project is going to be a multi-chain DeFi protocol that is building intuitive derivatives and a trading platform. Our guest today is Eric, co-founder and CEO of Injective Labs. How's it going, Eric?
Hey, how's it going? Really glad to be here.
Yeah, it's great to have you on. And I think it's great to see that you guys are building the infrastructure for a multi-chain DeFi ecosystem, specifically targeting Cosmos. So I think it's really exciting, and we'll definitely get into that.
Yeah, we'll love to.
Awesome. Cool. And now we're going to jump into our next project. And this is a project that just launched mainnet last week on Solana. So 01 protocol is a derivatives exchange that offers perpetuals, but also is looking to offer some unique products, which we'll get into. And today our guest will be Ryu, core contributor and core founder at 01. How's it going, man?
Hey, Greg. Super excited to be here. Thanks so much for having us. Like you said, we just launched a few days ago, so yeah, just super stoked to be sort of sharing 01 with the rest of the DeFi world.
Yep, amazing to have you guys on, and it's great to watch you guys launch. Excited to hear what's coming into the future. So with that, we're going to jump to our next guest, and this guest is also building multi-chain, notably on Solana and Near, which have garnered massive attention recently. I'm referring to SpinFi, who is currently hard at work shipping derivatives both on Near and Solana testnets. Today, we have a few members from the team joining us. We have Andre, who's the product analyst, Dima, head of business development, and Stacy, head of marketing. How's it going, team? Great to have you guys on.
Hello, Greg. Yes. Well, actually, okay. Unfortunately, we work a lot every day. It's it's really difficult to build something on blockchain, I would say. And I think that my friends will come aboard. Sorry.
Yeah, definitely exciting to have you guys on. And I'm going to get into our last introduction here, and then that way we can just jump into this roundtable discussion. Awesome. So our last guest is going to be Cypher Protocol, and I'm personally excited to continue watching Cypher build. They're building dated futures on Solana. I'm actually going to be at the Mountain DAO in Salt Lake City, which they have helped put on. So going to be on the ground reporting on what Cypher Protocol is building. And our guest from Cypher DAO is Barrett, who is a core contributor. How's it going, Barrett? Amazing to have you on, man. Looks like you're muted.
Classic. It's going well. Super excited to be here. Super excited to see you here in a handful of days actually as well.
Yeah, definitely. I'm actually heading out tomorrow, so got to figure out some logistics for that. But just a little more on Cypher. I think it's exciting that you guys are looking to bring that taste of traditional finance with futures, but then also capitalizing with the use of synthetic assets to get into things like pre-IPO markets. So we'll dive into that. Let's just get everyone on here so we can jump into the first question. Awesome. I don't have any particular order, but we'll start here with you, Barrett. Let's just set the stage with everyone. What are the use cases of derivatives? Why do they have so much growth? And just like, let's talk about this whole idea of synthetics, derivatives, DeFi, and what are you guys specifically building at your protocol?
Yeah, great question. I mean, well, there's a lot to unpack there, right? Derivatives in general offer, a multitude of, options, right? You can use them for hedging. You can use them to, gain asymmetric upside, right? There's a lot of different use cases, for derivatives. We're really excited about building synthetics. It, allows you to be very creative in the types of markets that can be launched on a given protocol. Especially as the future is, in my opinion, even there are some multi-chain derivatives platforms here. There isn't going to just be one chain where everything exists. Multiple chains will be the way of the future. And so having that synthetic asset is nice, especially in the early days when not all assets can be bridged. So, we can create dated futures, on a NFT collection, for example, that's on Ethereum and not bridged to Solana, right? We obviously are able to create futures around pre-IPO companies. We're also doing this for pre-token protocols as well to really aim to bring that price discovery forward and allow access to certain markets that general populace has been widely excluded from for a number of years.
Yeah, that's awesome. And just to pull some other people in, I mean, you guys don't have to go over exactly what derivatives are, but Eric, it'd be great to hear a little bit about what you guys are building at Injective, and then jump over to Ryu at 01 after that.
Yeah, sure. So over at Injective, the Injective Labs team is working on very, very exciting things. So Injective as a chain kind of started off with this core application of the exchange module, which can be highlighted with all the relayers building on top of it. And all the users can immediately access those relayers to kind of check out the markets and check out the features. And obviously at Injective Labs, we built Injective Pro. And to date, I think on the Injective chain, it has recorded over $3.5 billion. And the very beautiful thing about Injective is that, first of all, there's an order book layer that is completely on chain. All the data is completely available. So that it means that, there's a lot better expression of liquidity. And, within the current structure of the overall DeFi landscape, automated market makers are generally created as a response to the scalability and the state size issue, to kind of mitigate against the shortcomings of implementing a fully on-chain order book. But Injective kind of turns it around and basically builds an extremely efficient and fast and kind of blockchain advocate order book infrastructure. And then on top of it builds like a derivative module. So this way it creates this completely new set of possibilities for the overall DeFi ecosystem. Basically, any type of auction can be happening, and also there's new primitives, new market making strategies, and just in general, far more superior slippage and capital efficiency that will occur on Injective over time with the integration of Cosmos. So yeah, it's a lot of exciting things that has happened and a lot more exciting things that will happen.
Yeah, that's great. And I think you mentioning the on-chain order book is something massive, and we'll get a little bit more into that. Ryu, curious to hear what's going on at 01, especially with mainnet just coming a couple days ago.
Yeah, totally. I mean, sort of piggybacking off of the whole order book conversation. When we first started working on 01, it was always sort of this question of like, how do we take all the components of a centralized exchange and fully decentralize it, right? Like that's sort of really the dream for a lot of traders, and really sort of what we're aiming for at 01. And as we were sort of working with the Solana team and the Serum team, we realized that dream could become true on Solana. And so we set out to, essentially build out essentially taking, every component of a centralized exchange and decentralizing it from the core, right? And so I think like the order book for one is super important in that element, because it's just a very intuitive and simple way for folks, both retail as well as professionals, to trade, and also it provides sort of granularity to trade that you probably wouldn't get in certain sort of other mechanisms, and so being able to sort of compose directly on top of the Serum order book, and provide this super high throughput and fast execution through Solana, is sort of getting us one step closer to just taking centralized exchanges and just making them fully decentralized, right? And on top of that, I think like the other sort of core components is cross collateralization and cross margining, which I know a lot of other folks here are working on as well. But for us, it's like, being able to collateralize your position using like any sort of token, not only USDC, is super capital efficient, right? So like I could deposit my SOL on 0-1 and collateralize my position and go long somewhere else, right? And in terms of cross margining, this means you can open multiple positions across different markets as well and have them all share the same leverage, which just makes it a lot more capital efficient for traders. And at the end of the day, that's what people want, right? And so, yeah, like I think really what sort of we're striving for here is like, how do you take centralized exchanges and fully decentralize them? And I guess like the conversation around like why decentralize decentralized exchange is also a pretty interesting conversation. But like the TLDR for us is just like it aligns incentives so much better with the community and with the rest of DeFi. And I think like that's sort of the future that really we're all trying to strive for, right?
Yeah, that's awesome. And I'm definitely going to poke a little bit more about this idea of decentralization, DeFi. I think it's a great topic to discuss, especially as we're in the early days. To wrap up these introductions, I know you guys probably don't really need to answer this question of what derivatives are at this point, but it'd be great to hear what you guys are building at Spin. I think you guys, it's awesome that you're also building Near and Solana. And then it even looks like you guys are tying in NFTs to the mix, which I think is a little unique. If you guys want to expand on what you guys are building.
Yeah, sure. I'll jump in here. So yeah, basically building derivatives on Solana and Near blockchains. The goal is basically to be able to kind of serve the institutional traders with a very solid, fast and good working API, and on the retail side, be like the super user friendly DEX for the retail community, and being especially kind of heavily focused on the mobile side of the experience.
Yeah, that's great to hear. I'm just going to jump past these introductions now and get at something we were hinting at a little bit. We touched on the need for an on-chain order book. I'm curious, what is the infrastructure that goes behind an on-chain order book? What are the difficulties of getting this all on chain? You have things like liquidation engines and even just bringing the liquidity. I think it'd be great to start with Injective on this one and then lead into you guys. I know Solana with Serum is pretty robust infrastructure, but we'll start here with Eric.
Yeah. So obviously Injective Chain had a slightly different approach from Solana in that it utilizes the Tendermint consensus and also a Cosmos SDK to guarantee the instant finality. So this also creates two distinct types of feature that cannot be accessed elsewhere in any other layer one, which makes Injective Chain extremely unique in the sense that it has the begin blocker and also the end blocker. And end blocker is purely utilized for order matching and order settlement. So that means that all the orders are pending and coming. There won't be there will not be any type of race condition issues. All the matching will all happen at the exact same time, and this obviously guarantees a lot of the issues that were present during the Ethereum early days when there were Ether Delta and there were other order book based exchanges that was doing a lot of front running. And on the other hand, just in general, there are immense amount of engineering difficulty when it comes to implementing an on-chain order book. Managing the state size, making sure everything is optimized, figuring out the market plus order growth and how it's going to impact the overall scalability of the chain. And those are kind of problems that we always have to constantly work on. And we know that, just in general, just because a blockchain that likes to be highly scalable, that tries to be, extremely fast, doesn't mean that it'll actually be able to handle the realistic load in a sense that during realistic timing, there's going to be a lot more diversity and type of pains and different types of transactions and different types of errors that might catch the initial protocol creator offhand. And that's something the Injective Labs team is also constantly monitoring and making the right contribution from time to time to make sure that all this goes right. But so far, obviously, Injective chain has a TPS of around 10 to 20,000. And obviously, currently, there has been a downtime. There hasn't really been any issue on the protocol level. So the entire Injective community is really grateful for that.
Yeah, that's awesome. And it would just be great for you guys building on Solana to touch on the infrastructure that goes into that, some challenges, how big of a help Serum is in this, whoever wants to take this. But it'd be great to just build off what Eric was saying from your perspective over on Solana.
Yeah, so I'd be happy to sort of start it off. So at 01, we're actually working directly with Serum and building directly on top of them when it comes to our order book and matching engine. For anyone who's looked over the Serum source code or who have tried building on top of Serum, know it's a super optimized, very, very well engineered piece of code, and really trying to make the most of Solana's like 50,000 transactions per second, right? Albeit in the last few weeks we have encountered some issues, but they've actually have been rolling out patches that have been fixing the sort of Solana transaction throughput. But anyhow, that's not the topic of conversation. So yeah, with regards to Serum, I think the sort of without going into the nitty gritty of how it's designed, essentially you have like this event queue, and that ensures that events sort of follow a specific sequence in terms of how people place their orders, and so that sort of touches upon the race condition there as well, and then because Solana is able to support such high throughput when it comes to your order execution, things usually get confirmed within seconds, and especially when it comes to and then the margining thing is sort of built on top of the order book, right? The order book itself just processes the matching stuff. You still need to build out the whole margining system and the funding system when it comes to derivatives, and that's sort of where 01 comes in. And ensures that when you're placing a perp order with some certain leverage, that you actually have enough collateral to take on that position, and you can't sort of go 2000x with your $10, right? And so yeah, hopefully that gave sort of an overview of Serum and sort of how derivatives exchange is built directly on top of Serum.
That was great. Barrett or the team at Spin, did you guys want to add anything about that? Any differences you guys, or even what are the difficulties? It sounds like it is a lot of work to get this on chain.
I can chime in. So I mean, at the end of the day, Cypher is pretty similar-ish to 01 in the sense that we're both built on top of Serum. We're both derivatives protocols, albeit focused kind of on different style of derivatives. But a lot of we have margining capabilities as well. I think one of the original challenges that we had with working with Serum was that you could only trade like SPL tokens, right? So you can't trade like a true derivatives contract on Serum. Now that is changing with the rolling out of their Serum Dex Core, which is the asset agnostic order book, which is like just a general matching engine for essentially anything, right? Spot tokens, you could just trade orders, right? Like a true derivatives exchange, which is really awesome, right? And so you have to design things in a certain way to enable the trading of SPL tokens. Currently, now when AOB rolls out, that kind of goes away, and you can trade arbitrary orders on top of Serum's Dex, which is really exciting. And so that's something that the Cypher team is really excited about going forward and playing with this new AOB in the future.
Yeah, and it's definitely great having you guys both on, building off the same infrastructure, but I'm sure you guys are having somewhat different issues as you're trying to build different products, but also similar issues. So it's great to have both of you guys on. Anyone at the Spin team want to add on just general how it is building infrastructure for an on-chain order book and bringing derivatives on-chain?
Yeah, so I mean, the asset agnostic order book, as Barrett said, is a brilliant piece of software, and it definitely allows to ship derivatives products faster and easier. But on the other side, there is like this complexity with how this kind of general liquidity available through Serum will be available to different DEXs with different liquidation engines and different margining systems. And this is kind of, for us as a team for now, this looks like a black box, because there seem to be no solutions at the moment rolled out. So kind of doubtful at present that we'll all be able to kind of keep it on top of Serum and have access to that liquidity, unless the issue with the liquidation systems for the common margin vault is resolved. So kind of something that we're thinking a lot about.
Interesting. If no one wants to build on that, we'll jump to the next question here, and we'll just get into a little bit more what you guys are building. What is differentiating? What products you have? I know something like Injective, they're building a lot of the infrastructure. Over at Cypher, you guys are building specific dated futures. So let's start with Spin here. I've been giving them the bottom of the stick. You guys can outline what specific derivatives are you guys focusing on. We'll jump over to Ryu, head over to Injective, and then finish up on Barrett at Cypher.
Yeah, sure. Well, I mean, the product itself is somewhat kind of common and very well known. So it's a typical perpetual contract. The goal here is basically to be able to list as many liquid and especially liquid tail assets on the DEX, because we think that in terms of like let's say business and commercial strategy, like long tail assets with decent liquidity is something that drives traders to the new platform. We've seen that with kind of Binance and FTX. So having a strong product in general, plus the right assets on the platform, could drive the volumes and kind of benefit both like traders and the platform in terms of growth. And as I mentioned already, so we've been thinking a lot about the mobile side of the product, and it seems like as at DYDX, for example, they've mentioned multiple times that there are not so many platforms that nail down the mobile part of the crypto trading. So Robinhood is brilliant at that, for example. And on the DEX market, there seems to be an opportunity to offer something. So I mean, a combination of the product and assets is something that we're looking at.
Definitely, yeah. That's super exciting to hear. And then we'll jump over to Eric just to hear what they're building over at Injective as well. Oh, we lost Eric. We'll jump over to Ryu and see if we don't get him back.
Yeah, totally. And so at 01, we're building all sorts of funding-based products right now. So right now we've launched with perpetual futures, and so nothing crazy about those. It's your typical market price minus index price type funding rate. We currently launched with 2 markets so far. We have a few markets coming up. We really built sort of 01 to scale to as many markets as possible, and so we'll be able to support collateral with up to 50 different tokens and up to 100 different markets. And really, the way we're thinking about this is like whatever markets the community wants to be like, that's sort of what direction we're going to go in. And sort of with regards to products, right? Like perpetual futures is only sort of the top of the iceberg for us. We're actually working on power perpetuals right now. For those who haven't heard, essentially they're similar to perpetual futures, except that instead of just simply being pegged to the index price, it's being pegged to the index price to some power. And so for instance, the index price squared, right? And then we can sort of call that like SQUL for like, squared Solana. On Ethereum, you've probably heard Opine have pushed out Squeeth, which stands for squared Ethereum, right? And happy to dive deeper into sort of why this is important and how power perps are different from other traditional products. But the TLDR really is like you have a very different payoff curve that is essentially convex, and so it provides different properties to traders, and actually allows a lot of composability with a lot of structured product teams that we're working with, Chest, Friction, Katana. and also allows just regular traders to take on different types of risks when it comes to trading and taking on various positions. Yeah, I'll keep it at that. I don't want to take up more time.
No, that's great, Ria. And I'm curious if anyone on the panel here specifically has a question for Power Perpetuals. That would be fun. In general, I'm interested to check it out. Not sure I 100% understand it here on this panel, but if anyone has any questions for that on Power Perpetuals, that would be fun to ask about. If not, we'll jump over to Eric and he can outline what's going on at Injective.
Yeah, I think over at Injective, as a core contributor to a blockchain, there's a lot of work being done. And right now, I think the biggest thing that we're all extremely excited about is the Cosmos layer plus the smart contract behind it. Because right now, the Injective team is working on, first of all, the Cosmos integration, which is already live on testnet. And second of all, some of the core market making contracts that will enable automated strategies that are rival most of the sophisticated market makers within the industry right now, implementing Stoichkov model on chain and allow kind of this instant creation of pool with far superior liquidity and slippage compared to any type of current AMM model. And that's simply because it's an order book infrastructure that allows that. And on top of that, there's just a lot of exciting things that's within this ecosystem. For example, more and more relayers that are spinning up. And also, I would say there's also a global margining mechanism that are being worked on right now. It appears to be the path where basically stablecoin will be utilized as kind of this global collateral to be able to cross margin across all the assets. But it's an active R&D session. So basically, a lot of possibilities are being worked on by the overall Injective community, and always something exciting to check out. Because there's progress every day on like all these new aspects.
Yeah, definitely great to hear about. And then I know, Barrett, I hinted a little bit what you guys are looking to build, but we'll jump over to you here to close this one up.
Yeah. So Cypher is, again, dated futures on Solana. We have the capability for like doing synthetic assets, enabling the protocol to be leveraged for trading things such as like pre-IPO derivatives, pre-IDO derivatives. We can, structure products to design, DeFi interest rates, collection futures around NFTs. But we are focused on these like public markets upon like initial launch. Very exciting places to trade, in my opinion. There's no real great way to trade liquidly for pre-IPO or pre-token markets right now. And if you look at how token launches go and public launches, there's a lot of volatility in those like first like handful of days and weeks after something goes live, right? And these markets on Cypher can really help bring that price discovery forward to give a protocol or an organization a better understanding of what the market is already willing to pay and kind of eat up a lot of that volatility prior to a launch, right? And therefore, they can have a more stable launch. Their token price isn't going all over the place, where it rockets up and then rockets down. And I think that's something that will be very healthy for the market in the long run, right? And also give a lot of the people access to private capital markets that they haven't really had before, right? I think they're paying attention to a lot of CT. There's been like recent backlash around VCs being able to get in earlier than the general community, and these types of markets are a way for enabling the community to participate in deciding what a protocol or an organization should be going public at, and allowing them to gain potential upside and downside in the earlier days before a token is launched, right?
Yeah, that's awesome to hear. And just in general, to summarize this, it's great hearing everyone has their specific niche they're building to specific products, whether it's the chain, the infrastructure, or the actual derivatives themselves. To open this back up again, how difficult is it to bring liquidity into these markets? How has it been finding market makers? It seems like this is obviously that's very fundamental. And then I want to kind of go around and ask this to everyone, but then take it the next step. Is it easier at this point to find market makers, or getting the takers, the retail on the users to actually use your platform? Which one's harder? Because it seems like VCs are quick to step up to want to be market makers for these platforms. Let's kick this off with Eric.
Yeah, sure. I think this is more of a relative question. Obviously,
Okay.
baseline liquidity, it's not difficult at all to find these market makers. But in order to be competitive amongst, the top 5 exchanges or the top 10 protocols out there, that's definitely a long and arduous process of achieving that liquidity and getting all the market makers in place and making sure like the 2% def has basically the top of the class slippage. So on another hand, obviously for takers, this is always going to be a constant battle as well. It's more of a platform issue, where in the sense that you need both parties and one kind of feeds off of the other, creating this positive feedback loop. So it's really about kicking start, either side of it. But I would say that it's really again like a relative problem at different stages of the scale. For a platform with deal liquidity, they might lack a lot of takers. For a platform with the takers, they might lack very, very strong market makers. For Injective's case, I would say it's somewhat similar. It's there's a lot of takers, but it lacks kind of like the amount of liquidity that are able to 100% handle all that. Just because currently Injective, I would say, has a lot of takers that kind of puts Injective at amongst the top 30 or top 40 exchange platforms. But the market maker, especially given that this is a blockchain native platform, and the fact that like interacting with the Injective chain is a completely new way of doing things, it definitely takes time for even the largest institutional market makers to slot the time and contribute their dev resources to finish the integration.
Yeah. No, that was very well put. I'm curious what, Ryu, you have to toss in on this maker and taker, and how you balance the platform to do this. I know this is probably something you guys are starting to experience firsthand now, being on mainnet.
Yeah, totally. I mean, yeah, I think like, yeah, the maker and taker question is pretty interesting. One, it's always kind of this chicken and egg question, like, oh, do you start out with like really deep liquid and lots of maker liquidity, or do you first come in with a lot of the taker volume that brings into maker liquidity, right? And so but this also sort of kind of creates like a nice like positive feedback loop, right? And so like for us, it's like we try our best to sort of handle both fronts, right? And we do put an emphasis on maker liquidity here. I think like for us, like, well, at least with what we've seen across more traditional exchanges, is that places where you find the best spreads, places where you find the best liquidity, that's sort of where people want to trade, and naturally sort of those are kind of the places that people will naturally go to. And so for us, it's really important to partner with some of the really largest and experienced trading and market making firms to really provide deep liquidity to the books, right? I think for instance, like that's one of the reasons why Serum has such a huge advantage, and no one can just really fork Serum, is because they have so much liquidity already on the book, and then so many makers making those books. And so in a similar way, right, like we're actually working quite closely with both smaller retail market makers, but also large institutional market makers, to make sure that books are deeply liquid. I mean, I think like this is particularly a situation that we'll find ourselves in when we launch Power Perps. And we're actually really excited to be working with a few really big market makers to provide deep liquidity there. And so, yeah, I hope that answered the question.
No, that's great. And just to open this up to give Barrett and the team at Spin a little more to answer on, what are things specifically you guys are trying to do to bring both takers and makers to the platform? No one wants to jump on. Oh, you got it,
I will. I was, I feel like Spin has been going last quite a bit, so I was trying to.
I know. I keep giving them the short end of the stick, but I'll flip them to the top on this next question.
Yeah, I mean, I think that one of the things we can focus on, right, at Cypher prior to launch is talking to a lot of market making partners, like potential partners, right? I think that that's the biggest thing that we are doing right now. I think echoing a lot of what Ryu said. The lower the tighter the spreads, the more liquid the protocol, the more people are going to want to be able to trade there, right? And so having those like market making partners is I think very important for order book based protocols at the end of the day. And then how do you get retail excited, right? I think there's a number of different ways that we're exploring, right? It's having a very simple, intuitive UI, something similar to that of like a Robinhood or a Public.com, right? These are popular retail trading applications here in the US. And then also making sure that they have exciting markets to trade, right? I think that that's like a big one as well. And that's kind of why we, Cypher has initially focused on these pre-public markets. I think that there is a substantial amount of retail appetite for these particular markets. I mean, obviously crypto in general, right? But I think some of these like more exotic style markets can be really popular for retail and institutions at the end of the day to either market maker come place discretionary trades if they're a hedge fund, or algorithmic trades if they're a quant fund, right?
Definitely. Spin, you guys can close that one up, and then I'll have a fun fresh question for you guys because I know we hit a lot of the big points on that one.
Yeah, sure. So so on the market making side, I think so same for us. We're talking to a lot of market makers at this point, and basically what we're trying to do on that side is build out the API that they really love and that's really easy for them to kind of manage in terms of tech. And there seems to be no shortage of liquidity there. The tricky question is retail, really. So if you take a look at most of the protocols that are being built on Solana, for example, we'll see that so the TVLs are large, but not much trading activity is happening, especially like with the smaller wallets. So that means that mostly kind of institutional and whale type of guys are sitting in there with their funds. To us, it looks like retail gets excited when they have an opportunity to trade the kind of next hot 10x asset or something like that, and like easy to use intuitive interfaces where they could kind of make, for example, multiple leveraged bets on multiple like potentially 10xing assets. So this is something that we think might bring in additional retail trading activity there. Plus brainstorming on the copy trading feature a bit. eToro, for example, has been very successful with that in the Tradify space. Nobody has been focused on that feature in the crypto space. Even like the bigger guys in the centralized exchange section of the market. So probably mixing up all of those on the retail side may bring kind of more proactive retail traders through the platform, and then makers will be kind of ready to meet them there with nice and deep books.
Yeah, that's great, and a ton of insight all around. That was something that I think is a fun question, right? You have both sides of the network and they seem equally important. So how do you get the ample amount of both to really let the markets run at equilibrium efficiently? All of that good stuff. To jump to the next question, and this one's very broad. Ryu hinted at it in the beginning, but we'll start it off with Spin. What is the goal of decentralization within these platforms? How do you guys look to achieve that? And what does decentralization mean for your protocol? Because there's so many different spectrums of decentralization. It's also important to note that you guys aren't just going to write a white paper and then people are going to come build this. There needs to be people at the helm, especially in the early days. So we'll start this off with Spin. What is this term of decentralization? How are you guys looking to get there?
Well, that's a tough one. So I mean,
no, and the point here is like this one is open.
like, yeah, I mean, like ultimately, it makes like like in my opinion, like personally, I'm thinking that it should be something that governance is like when the platform participants basically like, and all of the token holders are so much into the product that they're incentivized to make decisions that drive the product forward. And these are not only like very like extremely smart people, for example like Wintermute on DYDX, and Three Arrows on DYDX proposing some special changes in their kind of incentives for market makers and proactive trading on the platform. And this is something very tricky. So basically, driving the entire community around the protocol to ultimately manage it in terms of like product commercials, um, bringing more people to the platform. All of that is like extremely complicated and not kind of and ultimately in the very end not kind of orchestrating all of those people to kind of propose any of the decisions and not making them kind of vote for those decisions, but in a sense giving them the freedom to do that on their own and giving them a sense of kind of empowerment that they can do that.
Definitely. And just to add on here before we jump to the next person, I think it's really notable just to put this North Star is decentralization, but there's so many complex layers beneath this. Not only are you guys building derivatives on chain, which is extremely difficult, but then you take this other layer and we still don't know how to govern society and make things decentralized throughout the world. So this is always just one of those fun, more broad questions. How do you get there? What does it mean? And it's fun to talk about because we are so early in this DeFi space. I'll toss this over to Ryu next and just hear what you have to add on to that.
Yeah, I mean, yeah, I think like we're still super early in really all of the protocols trying to figure out what's the sort of best fully decentralized model, right? Everyone's trying to do their own thing, and just trying to figure out what and play around and see what could be the thing that brings everyone into a more efficient decentralized organization, right? Because like, or at least from what I've observed, right, a lot of the sort of issues that you still see in a centralized environment are not necessarily entirely removed in the current state of decentralized organizations, right? You still have a few players that make most of the voting decisions. You still have a few whales that make most of the sort of votes in a lot of these organizations, and that's not too different from unfortunately how a current democracy works. And so the sort of the goal with decentralization is super noble, and I think like we will definitely get very close to it, but I think in the current state there's still a lot of improvements to be made, right? I think goals, steps towards that are of course to sort of decentralize voting. I think like every protocol will sort of go layers through that, but I think like really when it comes to an exchange, what's most exciting is that like the story that I like to tell is like if a large player and trader, or even the regular retail trader, is trading on a centralized exchange, you end up paying a lot of fees, maybe a non-trivial amount directly to a centralized entity, whereas in a decentralized way you can also gain upside on paying those fees, because those fees goes to an insurance fund. They capitalize DAO treasury, and that sort of those fees, either directly or indirectly depending on protocol's design, end up going back to you, and you end up riding the upside in sort of trading on that protocol. And so that's sort of how the sort of framework that 0 1 is thinking, like how do you align incentives for people who trade on your platform? And I think like that's really how you're going to get to decentralization, right? Like when everyone is sort of aligned, incentive aligned to sort of be helping the network and promoting the network.
Yeah, that was very well put. Eric, do you want to add a little bit more on that. I also know Eric has a hard stop coming on. I have one more question. It'll get a little broad, so we'll start it off with you, but go ahead and add on the idea of decentralization.
Yeah, I think obviously Injective's DNA is always about full decentralization. Even as back as 2018, the entire design philosophy of the Injective chain and all the components related are all all based on a fundamental pillar that there can't be a single central component, no matter how difficult it might be for different engineering choices or different scalability concerns. There cannot be a single centralized component within the entire lifecycle of any trait or any behavior of the users of the platform or the protocol. And I think the good thing about where we are now and the entire community is that the Injective chain really did embody that philosophy. So, I mean, like right now, what the Injective community really focuses on is kind of having a more efficient voting system and also governance process. Right now, basically, there's an issue where there's so much governance proposals going on. I think within the very, very short period of 2 or 3 months since the canonical launch, there has been over 100-ish proposals already. And figure out the right way to strike a balance between, I would say, having the right type of voting period for different types of proposals, and also finding the right balance between validator participation and also general user participation, which I think is kind of the key component that the community is currently trying to figure out.
Yeah, definitely interesting to hear that. And then Barrett, you want to close this one up? And then I have another broad question after this to tie up our discussion.
Yeah, I mean, I think everybody here touched on like really important parts, right? Decentralizing voting. How do you do that? How do you, incentivize the community to really participate and participate in like a meaningful way? I think is really important, right? There are of your token holders, there's already like a small percentage, or at least currently, that are actually going to participate in like the governance proposals. And how do you structure something to get the broad token holders to participate, right? And I think that there's like a number of really interesting ways to do that. It could be from the revenue distribution. You could structure it so that you're essentially paying people to participate, right? Not just like kind of this dividend style methodology that some protocols are taking right now, but like, hey, like you like some people stake to get that revenue, but you could design it in a way that where you have to make proposals and vote and like participate in open discourse, and then for your actions that you have taken for advancing the DAO forward, right, and the protocol, you get compensated for that. And I think that that's something that we're heavily looking at Cypher, is kind of some new mechanisms on how to really drive that truly decentralized voting, to where it doesn't matter if you have 10 tokens or 1 million tokens, right? Like you feel that you're being compensated and want to participate in that on-chain governance, right? I think that there's like also like a number of other ways of I mean, that's like that's the holy grail of decentralization, is getting everybody in your community to be participating and voting, right? But obviously everybody here is built on a blockchain, so there's like inherent decentralization on like the back end, right? I think often overlooked is like the front end. A lot of stuff is hosted in GCP, AWS, and that is at the end of the day like relatively centralized, if not completely centralized, right? And you can as some of these more decentralized cloud services come out, right, you can migrate your front end to being hosted on one of those. Akash, for example, I've started to see people utilize Arweave for hosting front ends. I think that that's like really cool, and again provides like another aspect of decentralization, right? But I think what everybody here and in DeFi at large is really trying to figure out is how to gain that complete buy-in from the community to maximize the number of votes that you are getting, right? And how do you do that? I think that there's a number of ways, but one of the ones I think it could be like paying for participation essentially.
Yeah, it's great. It really is one of the golden questions. And I think a big thing for people to understand is it's not, oh, we're thinking about decentralization, it's going to happen tomorrow. There's years of debt built up to this. It's just an incredibly complex problem. It's like a very fundamental problem as well. So seeing it in the discussion, trying to tackle it, I think just makes innovation really exciting. And it's going to be cool to see what comes. To start to wrap this up, we'll start with you, Eric. I'm just curious, what are some of the largest upcoming developments you're excited for Injective, and what do you want to see in 1, 2, 3, 4 years in DeFi or derivatives? You can take one of those, both of those, doesn't really matter to me.
I mean, in the short term, there's a Chihuahua and also Stack's proposal on the governance forum. And that was actually very, very exciting for me because those two are kind of my degen stacks. And also, I think generally in the midterm, I would say like this quarter, this quarter and the next as well is CosmWasm deployment and all the applications that are CosmWasm based that are going to be building on Injective and launching on Injective. A lot of the work with Injective Labs and also overall with the foundation as well has been getting all these projects to build on top of the CosmWasm layer, creating a completely a really diverse offering for all of these applications, beyond just exchange, beyond just DeFi, maybe some metaverse plays as well. It's really sky's the limit. And I think within the 2, 3, or 10 years, DeFi is going to be the financial underpinning for overall global financial infrastructure. So let's say if someone wants to trade like a gold commodity or like a gold futures or some sort of treasury futures or some sort of bond futures, it's all going to go through like a decentralized infrastructure just because how efficient this a cross-border and a cross-national payment infrastructure is with crypto's help.
Yeah, that's very well put. I also think it's just exciting to see what's going to be coming out of Injective as the Cosmos ecosystem starts to develop, and just see how much infrastructure you guys can really provide in the innovation. So great to hear that. We're going to jump over to Spin next. And I know Eric set the stage for DeFi being the underpinning of all of finance in the future. I would now take this question and spin it a little bit. What do you guys think needs to be done in the next year or so to start getting towards this idea that, okay, decentralized finance is the go-to place if you want to interact with markets? And then also just what are you guys excited for at Spin?
So, well, I mean, said this multiple times. I think that retail guys are kind of heavy mobile users. So having kind of the right mobile product market fit is crucial. We all know, for example, that there are tons of traders in Asia that are using mobile heavily to trade, or that are using mobile heavily to kind of access any other DeFi products. So the evolution of the DeFi applications on the mobile, in terms of mobile interfaces, I think is crucial. We've seen that in the traditional finance. I'm a firm believer that these kind of big waves they will be similar in the DeFi space as well. In the long run, I think there will be kind of this vision for the boxed derivatives-based products, so like basis trading protocols, etc. So they will probably evolve heavily in the upcoming years. And well, I mean, if they're user friendly enough and well explained to the retail user, there will be more and more TVL there. So I think it's cool to be part of the kind of like an infrastructure layer as well, so that the DEXs being built will be used by these apps as infrastructure layers to create their products. So something like that.
Yeah, and I really like the parallels you pulled there with mobile apps and retails. I mean, we've seen an explosion of people starting to participate in markets, and the go-to thing is a lot of people, especially here in the States, have a Robinhood app. So having something that's intuitive for the easy to use mobile definitely sounds like it's on the right track and gets me excited. It's reducing that friction that we currently see in DeFi. Rhea, you want to build on this a bit as well?
In my opinion, by the way, it's actually also about gamification, because more and more projects now go on gamification and start using some methods to onboard users by means of incentivizing them, providing them with some extra features, helping them to earn some tokens or some bonuses or whatever. So something similar to what you have in some online games. So if you are a user of, for example, PS4, you know how gamification works there. And now we see that in centralized finances and in traditional finances, and I believe that it will also come to DeFi, and it's actually already coming. So I think that it is actually one of the things that will come to the industry in the near future.
Yeah, that's an amazing point. That was actually something that I thought was really notable about Spin that you guys are trying to do. And I think gamification is proven. People want to have their avatars. They want to feel their own personal customization and also have ownership of these things. So it's great. Barrett, we'll jump over to you. Thoughts on what's exciting for Cypher? I know you guys are building. There's a lot coming there. And then what do you think needs to be done in DeFi to really start getting more towards the masses?
Yeah, great question. I think some of the exciting things for Cypher is I think we have a pretty awesome announcement finally from our team regarding our DevNet coming up this week, which will be super exciting. Now, in relation to what does DeFi need to address the masses, I think there's a couple of key points here, right? I think liquidity is one. I think crypto in general kind of suffers from this. I mean, if it's big relative to what it was 5 years ago, right? But if you compare it to traditional finance markets, right, it's still very illiquid, right? You can't have a hedge fund come in and place a multi-$100 million order and not just completely move the markets, right? And I think that with more adoption comes at additional liquidity. New protocols are coming out, building more price discovery vehicles, whether they're dated futures, whether that's perps or options, everlasting options like O1, right? I think that more price discovery tools will incentivize more institutional buy-in, right? And then there comes a lot of liquidity with that. I think Spin has touched on this quite a bit during this conversation, and that's getting good mobile experiences up. There's one point, and I'll probably mess this up, I think it's 1 billion people in India, right? And the vast majority of those people don't have computers, right? They have smartphones. And so, getting them a good mobile experience is, a really easy way to onboard quite a bit of people to markets, right? And that really will ramp up the liquidity in DeFi and in crypto in general. And I think that, we've been talking, crypto's been talking about this for a very long time, in relative, I guess, sense, right? In how is the on-ramps, right? It's still not super intuitive or easy for the layman. If I walk down the street here and I go, hey, can you send me money via Phantom? They go, what? I don't even know, right? And so they're well, okay, tell me what that is, right? And then they're okay, how do I get my money from my bank account to a decentralized wallet, a non-custodial wallet? I think that those steps can be made easier, and I know that there's a number of projects out there working to make those steps easier, and I think that would be a pretty big and important one for DeFi to really gain mass popularity, and that is just making the process from getting their money from a bank account to one of these decentralized platforms for trading, buying NFTs, etc., easier, right? And I think that's a big one.
Yeah, definitely on reducing that friction. Something I noticed, I was trying to onboard my brother into crypto, and he he's just frustrated with all this friction. And then we get to this point where more recently I start trying to offboard some of his stuff from crypto back to fiat. And there's so much less friction in crypto once you're in the ecosystem compared to traditional. It's just getting from traditional into this Web3 ecosystem. So I think that was very well put. Ryu, I think what we can be excited for is power perps, potentially everlasting options. You want to touch on anything if I missed that, and then start to tie this up for us?
Yeah, totally. Yeah, I think everyone brought up some really awesome points. I think like, you know, on the topic of you know, friction, with regards to UX and regards to onboarding new people, I think there really are two types of frictions, right? So the first one, that Barry was talking about is sort of the, you know, that like onboarding or like on ramping to crypto type friction, for you know, Web 2 to Web3 people, and then there's the other friction that, you know, we as DeFi builders encounter, is like, how do you make like these, like, you know, DeFi derivatives like simpler for people to understand, right? And I think like, you know, to touch base more on this second, you know, layer of friction, I think that's sort of one of the big reasons we're super excited about power perps, and you know, you mentioned everlastings, because they, you know, take very like complex functions, from that you would get by composing different types of financial instruments and package them into one simple thing that you can trade, right? And so that's sort of how I like to think about power perps and Evers. But yeah, so like, you know, powers are I would say like a lot easier to understand than like your regular option, right? Because you don't need to think about the strike, the expiry, and all that fun stuff. And so it's a lot more, it's easier to grasp, but with that ease of understanding it also comes, you know, a payout function that's very similar to what you would get with a regular option. And so in some ways, you know, you're getting kind of the best of both worlds. But of course, you know, it's not exactly one to one as an option, right? But we need to make compromises here and there. And so yeah, and so I think like really like the two most exciting fronts, with regards to DeFi in the next few months is really like, you know, one, like how do you tackle this like on ramping problem for like Web3 to Web2 people, or rather Web2 to Web3, and then how do you tackle this second layer of difficulty, which is how do you explain like farming and derivatives and these complex structures, and how do you get people to be more familiar with these complex strategies, right? And I guess like the last part, that I forgot to mention here is like also really like excited about all these like structured product stuff, right? I think like, especially with powers and Evers, there's this potential to bring a lot of these automated strategies, whether that's like shorting volatility or selling more complex strategies, in a way where, you know, users can just stake and earn, right? And so being able to provide the primitive blocks with regards to like perpetual futures, powers, and Evers, for people to be able to like compose on top of that is super exciting for us.
Yeah, and I think you guys summarized that amazing. Just to wrap it up, it sounds like a lot of things. I was talking to Ayush over at Katana, and it was a similar thing from him, packaging up some of these things, making them more easier to understand. Granted, there's still these other forms of friction that the users need to get over, but once they're in these ecosystems, offering things that exist in traditional finance, but maybe are highly gated. I remember coming into the space early and seeing someone like Suzu tweet, like, there's certain financial products that people structure that maybe only a handful of people in the world now know how to do. So it sounds like as decentralized finance starts to innovate more in this idea of decentralization, we get more scalable networks and all of these things fall into place. There's a lot of innovation. This isn't something like that's going to be perfect next year, the next, or whatever. It's going to be decades, and there's a lot of innovation to do. So I think that gets me excited. To wrap things up here, I would just say we touched on two really broad, big things I wanted to touch on: the idea of decentralization. That's been a big concept. And then also on top of that, just what needs to be done to get mass adoption. I think everyone on here agrees that it will happen sooner or later. It's just, what do we need to see? And we summarize that great. So with that being said, I want to thank everyone coming on from 01, Cypher, Eric at Injective, and then the Spin team as well. It was great having you guys on, and it'll be great to have another discussion. We're always checking out what you guys are building here at Solana News DeFi Direct. So with that being said, thanks everyone for joining, and I'll just do some final wrap-ups here, but thank you guys. Peace.
Thanks so much.
Yep.
Thanks for having us.
Yep. Awesome. So I'm just going to wrap this up here. Normally I do my outro there, but I just did it with everyone on. All I have to say is go ahead and give this video a like. Also, comment what project was your favorite. We're definitely looking to cover these people more and more. If you're on Twitter, go ahead and retweet. But other than that, you can expect a lot more content from all of these projects, whether it's Spin, 01, Injective, or Cypher. We're going to be watching for developments on all of this, especially as decentralized finance and the derivative space continues to grow. So with that being said, thanks everyone for tuning in.